Let's compare fiscal policy with monetary policy. This side we have fiscal policy, and here we deal with monetary policy. Fiscal policy deals with the goods market. So the initial effect is in the goods market. Fiscal policy, an increase in government spending, and this led to an increase in demand for goods and services, leading to an increase in the output level. We can also show this graphically. The increase in demand for goods and services shifts the IS curve to the right. Let's look at the initial effect in the monetary sector. Monetary policy deals with the financial sector. An increase in the supply of money leads to an increase in the price of bonds. This decreases the interest rate. We can show the initial effect by a downward shift of the LM curve. But the process does not stop with the initial effects. With fiscal policy, the increase in income leads to an increased demand for money. So we move to the financial sector, and we have an increased demand for money. This leads to a decrease in the price of bonds, as bonds are sold, leading to an increase in the interest rate. But we know investment is a function of the interest rate, so the increase in interest rate decreases investment spending. So we move back to the goods market. Investment decreases. So with fiscal policy, we see that the interest rate went up and the level of output also went up. On the diagram, we can see the level of output increased from Y1 to Y2, and the interest rate increased from I1 to I2. Let's look at monetary policy. We've seen initially the increase in supply of money led to a decrease in the interest rate. And decrease in interest rate affects investment spending. Investment spending is part of the goods market. So we move over to the goods market. Investment spending increases as a result of the decrease in interest rate, leading to an increased demand for goods and services, and the level of output also increases. So with monetary policy, we have an increase in output level of production increases to Y2, and the interest rate decreases. The interest rate decreases from I1 to I2. So with fiscal policy, we see level of production increase and the interest rate increase as well. But with monetary policy, we have an increase in level of output, but the interest rate decreases. But these are not the only variables that we need to compare. With fiscal policy, we see there's an increase in government spending, but nothing happened to the money supply. So money supply is constant. Monetary policy deals with money. We had an increase in the money supply. So the money supply is higher, but government spending remained constant. The other variables? Demand for goods and services increased, demand for goods and services increased, leading to an increase in the output level. So with fiscal policy, level of output is higher. With monetary policy, we have an increase in the level of production. Now we know private consumption spending is a function of the output level. So private consumption spending increased, and that is true with monetary policy as well. We had an increase in the level of output, so private consumption spending increased. With fiscal policy, we see that the interest rate increased. So here, the interest rate is higher, but with monetary policy, we had a decrease in the interest rate. So the interest rate is lower. If we come to investment spending, then we see with fiscal policy, level of production increase, investment spending is a function of level of production, therefore we have an increase in investment spending. But investment is also a function of the interest rate, and the interest rate went up, therefore investment spending decreased. We're not sure about the net effect. With monetary policy, we see that the interest rate decreased. That has a positive effect on investment spending. The output level also increased, again a positive effect on investment spending. So with monetary policy, we definitely can say that investment spending has increased. And that's the end of the story. The long and the short. Big smile. After an increase in taxes, we... Okay, ek sê vir my moenie sulke groot woorde gebruik nie. Expansionary, stop in jou papier. Hy lig is nog rooi. Maar die kamerspinning is ernstig. Ek gaan net vir jou glo nou hoor. En ek hoop jy is nou tevrede, want ek is nou klaar.